You work your whole life, you pay your taxes, you save and invest, and one day, if the fates align, you'll reach the finish line, retirement. Now you sit back and relax and just let those Social Security checks start rolling in. But for some, that first tax return after starting your Social Security benefits may come with a rude awakening. Some of your benefits may end up being taxable. And if your income is too high, a whole lot of it may end up being taxable. In this video, I want to explore how you determine if Social Security is taxable and to what extent. Hey everybody, this is Curtis Crossland of Subtle Crossland Wealth Advisors, and I help folks build more tax-efficient retirements. So let's get into this. Now, quick note on anything tax related, everyone's situation can be completely different. In over a decade of doing financial planning and asset management, I've yet to see two identical tax situations from two unrelated parties. So if you do have questions about your own situation, consider discussing those with a licensed and qualified professional. Let's start from the beginning with some basics. And I'll ask a question with an obvious answer, but I feel it's crucial to understand. Can Social Security benefits be taxed? The answer is yes. Part of your Social Security benefit could be taxed as income. The taxable portion will be determined on the basis of your filing status, your Social Security benefit amount, and amount of total other income. These taxation rules come from a set of amendments signed into law in April of 1983 by then President Reagan with the overwhelming support of a bipartisan Congress. The basic rule put in place was that up to 50% of Social Security benefits could be added to taxable income if the taxpayer's total income exceeded certain thresholds. Roughly 10 years later, in 1993, then President Clinton signed into law another change. Legislation was enacted which had the effect of increasing the tax put in place under the 1983 law. It raised from 50% to 85% the portion of Social Security benefits subject to taxation, but the increased percentage was only applied to higher income beneficiaries. Beneficiaries of modest incomes might still be subject to the 50% rate or to no taxation at all, depending on their overall taxable income. And another important point to make is that even if 85% of your Social Security benefit does have to count as taxable, everyone, regardless of their combined or provisional income, still gets at least 15% of the Social Security benefit that isn't taxable. Also take note that the terms combined income or provisional income are synonymous, and you may see them used in either way in various publications or letters. We'll take a look at how it's calculated as we discuss how combined income is used. So how exactly does this apply to someone? Well, if we take a look at IRS Publication 915, we'll see that they provide a guide to first help answer if any of your benefits are taxable, and second, how to calculate how much. To make that first determination, they tell you to compare the base amounts of your filing status with the total of your combined income. Here we can see how to calculate combined income, or again, provisional income, as 1/2 of your benefits, plus all of your other income, including tax-exempt interest. And take note of the exclusion section as well. You don't want to undercount your income when planning ahead. Base amounts are then listed at $25,000 if you're single, head of household, or qualifying surviving spouse, as well as if you are married filing separately and lived apart for the whole year. For married filing jointly, $32,000 is the base amount. And for folks that file married separate and live together at any point during the year, base amount is $0. Think of this base amount as the low bar set by the IRS. If your combined income is above that threshold, that's where you need to move on to the second part, calculating how much is taxable. Let's run a quick example, and we'll use Publication 915's Worksheet A to see if there's going to be a taxable amount. Let's pretend we have a married couple that files jointly, both age 67, that started benefits for the first time at the beginning of the year. We'll say that the total amount of Social Security is $35,000 for the year. We'll multiply that by 50% to get $17,500 for line B. And on line C, we'll say they have total income, not including Social Security benefits, of $25,000. And we'll say they received this from only investments in the form of dividends and capital gain distributions with no other forms of income during the year. We'll also say that they have $0 for line D, so no tax-exempt interest for them. And on line E, when we add up lines B, C, and D, we get a total of $42,500. When we compare that against the base amount of the low bar of $32,000 based on their tax filing status, we see that some of the Social Security will be taxable. It's at this point we'd move on to worksheet 1, and this would be the definitive way to determine what portion of the Social Security may be taxable. I filled in our example on worksheet 1, and we can see that the taxable amount of the Social Security is $5,250, or 15% of their total Social Security benefit amount. So here we can actually see an example where a portion of their Social Security was taxable, but just because they went over the base amount doesn't mean that their benefit is automatically applied at 50% taxable. So you can start to see the difficulty in this endeavor and understand how folks with income surprises could get blindsided by taxes that they weren't prepared for. And someone with very high combined or provisional income may find themselves right up at that 85% amount as taxable. Publication 915 does include additional examples of completed worksheet 1, and the IRS also provides an interactive tool that you can use to determine if any of your Social Security benefit may be taxable. I'll include a link to both of those down in the description as well. So what are some things to be aware of with this? Well, just because some of your Social Security benefit is taxable doesn't necessarily mean that you'll end up owing any federal tax. Keep in mind that after you add everything up, you do get to account for deductions and credits. This has the potential to reduce your federal taxes or perhaps even get you down to zero. On the other side of that coin, if you do end up owing income tax because of your Social Security, if you didn't have any withholding or make estimated tax payments from those benefits, you could run the risk of underpayment of your taxes and potentially have to deal with penalties or other issues. Folks that have sudden jumps in income from things like starting required minimum distributions, or from other unexpected sources, or from investments, may feel the weight of Social Security taxation more, and each year is really going to be its own endeavor. There's also a chance that increased taxable income as a result of this could interfere with or disrupt other credits. From a planning standpoint, having some of your Social Security check turn right back around into paying taxes might feel like a gut punch to your budget. This might impact your planned spending in retirement and possibly reduce your lifestyle if you're not prepared. And additionally, decisions that you make in regards to when to recognize additional income may get a lot more complicated, especially if you're trying to keep the taxable portion of your Social Security low. The takeaway in looking at this is to realize that anything taxable can get complicated quickly and is virtually always based on unique and personal factors. And while no one looks forward to necessarily including up to 85% of their Social Security benefit as taxable income, it doesn't necessarily spell disaster. We weren't able to look at an exhaustive breakdown of each and every potential scenario, but this just further highlights that if this has you questioning your own situation, then seeking the help of a licensed and qualified professional may be a good starting point. Once more, I'm Curtis Crossland, and if you want to see how we help folks build a more tax-focused and efficient retirement, be sure to check us out at subtlecrossland.com and subscribe for future videos.